Hello, good afternoon. You're watching Market Fatafat on ET now. I'm Vinny Motiwala along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon. And markets managing to hold on to a good day at least so far.
Absolutely, Vinny. If you look at the markets holding on to good gains with the Nifty actually still holding above that 22,200 mark, inching towards 22,300. If you look at the Nifty Bank, it is moving in tandem with the benchmark indices as we speak. Taking a look at the list of losers from 11 o'clock till now, if you look at the list of losers, they've definitely expanded a bit. You have NTPC, JSW Steel, HDFC Bank among the top three losers on the Nifty, while BPCL is holding the pole position about being the top gainer on the Nifty as we speak. 3% uptick for BPCL, Eicher Motors, Tata Consumer, Hero Motocorp are the other set of gainers. And the advance decline ratio continues to be in favor of the gainers as of now. So yes, good going with the markets and holding on to good gains.
Absolutely, holding on to the gains, but we have a lot of these individual movers that we will be talking about in the next 1 hour. And to talk about the technicals, today we are joined by Aditya Agarwala, while from the research team we have Ankita as well as Ansh joining in with us. A very good afternoon to all three of you all as well. And let's start with the stocks that have been buzzing in trade. So the first stock that we'll talk about today is Dixon Tech. Now we do have a brokerage note that's come from Invest4edu. They're maintaining a buy rating but hiked the target price by 400 rupees for Dixon Tech. So the new target price now for Dixon Tech that Invest4edu has given is 8,650 rupees per share. They believe that another customer win, another earnings season upgrade and a long cheer on the largest mobile OMD player globally, that is something that will work out well. Other than that, they think the new customers is something that could be added, would be around 3 to 5 million for the smartphones to mobile business, and this will lead to an 8 to 9% upgrade in FY 25-26 for the EPS front. So yes, on the back of that, we are keeping an eye out on Dixon Tech. They believe it's continuing to be an excellent player in the EMS category. Optically, there are optionalities there to enter into these new categories, backward integration. So yes, they already have the standing there. So it's an interesting play there. That's why the stock is up 3%, trading at the day's highest point.
All right, let's shift the focus then and let's talk about auto player Escorts Kubota, because that particular counter has hit its highest level since December 18 on an intraday basis, because the company have said that they are going to go ahead and raise prices from May 1st. If you look at the stock, it was pretty subdued just before the news could actually come in. However, the company has not mentioned the quantum of the price hike, but said that it would vary from cross models and regions as well. So on back of that, keep Escorts Kubota on your radar.
Absolutely, keeping Escorts Kubota on the radar, but that's what Aditya is keeping as well, Escorts Kubota. Aditya, on the charts, what this one looking like? Today surely buzzing away in trade, but do you expect this run up to continue?
Oh, absolutely. Hi, good afternoon, Vinny. Thanks on the show. This is broken out from a consolidation pattern of 6 months. So this was 6 month long downward sloping channel in which this stock was oscillating, and now finally it's broken out from that channel last week, and it's broken out on healthy volumes, Vinny. So it looks like the up move which has started is here to stay. On the upside, stock can easily test levels of 3350 to about 3500. Which is a decent upside from current levels, gives you a return of at least 7 to 10%. And on the downside, immediate supports are at 3100 to about 3050. So overall, looks like it's a good time to enter into the stock if you haven't entered into the stock. Plus RSI is trading out the level of 60, which is a sign of strength, shows that there is enormous strength in the stock, and above 60, if RSI is inches higher, stock can easily test levels of 3350, 3400 that I'm talking about.
All right, so Escorts, good time to buy if you haven't already purchased the stock. And in fact, it's not only Aditya who is pretty bullish on this one. And this morning, you also had Kunal and Nuresh. Both of them had the stock on their radar.
So it's there on everyone's radar, Escorts Kubota.
Looks like that, yes. So making a comeback once again, that's Escorts Kubota for you. But Ansh, coming to you, let's talk about Irida then. And why is this one in focus?
Yes, so the stock was actually up around 10-11% in the morning, but now also it's still holding on to gains by around 7%. The company has reported net interest income at around 481 crore as compared to 356 crore, which is up over 35%. Also, PPOP has gone up by over 44% from 338 crore to 489 crore. We are seeing a good jump in profit as well by around 33%. Even the profit before tax is up by over 66%. Now, if we talk about loan segment, then loan sanction is also up by around 98.4%, whereas loan disbursement is up by around 14%, and loan book has also gone up by around 26-27%. The net NPA has also improved from 1.66% to 0.99%. Also, if we see the chart of the stock seems to have given a good breakout from its downward sloping resistance. So for those reasons, the stock is in focus today.
All right, let's move on and let's talk about Reliance Industries. All eyes on that one, and right up till 8 to 8:30, I believe, Vinny, this time around. That's when the management will be addressing.
And it's a Monday at least. So Monday blues will continue with Reliance, but it's not going to be Friday that's going to be spoiled
So
by
which
Reliance.
means that tomorrow we don't have to wait for 2 days at least to see the reaction on the stock.
This will be an immediate one that we'll see finally.
Definitely. But what are we penciling in when it comes to the earnings, Ankita?
Well, yes, a big boy Reliance is all set to report its quarter 4 FY24 numbers. Let's look at what can we expect from it. Well, on a consolidated sequential basis, we are likely to see an uptick of 4% in the revenues. Well, EBITDA is also likely to see an uptick of 4.5%. The margins, however, are likely to remain flat at 18.1% versus 18.1%, which was in the last quarter. The net profit is likely to see an uptick of 5.6% in this quarter. Couple of factors that we need to watch out for are, you're expecting to report the highest ever quarterly EBITDA, aided by the growth in O2C segment and telecom. Also, the O2C recovery is likely to be, it's going to owe to the higher refining margins and also the throughput and the better petrochemical spreads. Also, retail is likely to continue the growth momentum, which will be supported by extra store addition in new brands, and the rising footfalls. Also, the E&P EBITDA is likely to decline due to the rise in the profit sharing with the government. Gas output and price extended is likely to remain largely flattish. Also, a few things that we will be watching out for in the management commentary is going to be the margin outlook in the refinery and the petrochemical business, the roadmap of the new energy business, commentary on the capex and outlay, and the 5G monetization plan is something that we all will be watching out for closely today.
Right, that is Reliance Industries, what to expect. Let's talk about diagnostics space then as a whole, Vinny, because you have Morgan Stanley that's come out with a note where they've initiated a coverage on Dr. Lal Path Labs with an overweight rating, a target set at around 2,681 rupees per share. Initiated coverage on Metropolis with an equal weight rating and a target price of 1,792 rupees per share. What they're saying, the expansion is easy. They're saying the profitable scaling is tough, is what they're saying. The industry has structural tailwinds, large unorganized market, and aging population, and improving affordability. They're also saying the Metropolis will trade at a discount to Dr. Lal as capacity expansion will drag the margins. They're expecting Dr. Lal to sustain its multiples owing to stable revenue growth and profitability. They're saying they prefer a larger player like Dr. Lal over Metropolis, and that's why initiating a coverage on Dr. Lal with an overweight rating. However, not bad for Metropolis because it's an equal weight rating.
Absolutely, over there. And both the stocks are buzzing in trade as well. Let's move on. Talk about Chambal Fertilizers then. Aditya, on the charts, what's the view for this one? In the last 6 months, we managed to see a decent return of around 35%. Going forward, what is the view now? Do you think this run-up that we've already seen in the last 6 months, maybe now it's time to book profits?
I don't think so, Vinny. I think stock will continue to head higher from current levels. In fact, after a good up move, stock witnessed a bit of a throwback, and in that throwback, it tested the neckline of the channel from which it had broken out, and now it's resumed its uptrend. So I believe stock is on its way higher from current levels. If it manages to sustain beyond 375 odd levels, I believe stock can easily test levels of 390 to about 430 on the upside. Looks like a positional trade to take, Vinny, from current levels. Plus, volumes are encouraging in the bull candles that we are seeing. So overall, looks like a healthy chart, and the technical indicators are also supporting the bullish view. Again, here both MACD and RSI are in the bull territory. So overall, still I would think that there is more room on the upside from current levels. One should definitely look at buying the stock with a stop loss somewhere around 360 odd levels and look for a target of 430 on the upside.
All right, so that's the take coming on Chambal Fertilizers. Ansh, let's talk about Geo Financial. Came out with its earnings over the weekend, is it?
Yes, that's right. And the stock is up around 3% in trade as we speak. The company has reported net interest income of 281 crore as compared to 269 crore, which is up by around 4.3%. We are seeing also some improvement in provision, which is at 2 crore. Also, we are seeing a good jump in profit of around 5.7% from 294 crore to 311 crore. Also, if we talk about the lending business, then the company has actually shifted focus towards secured lending. Also, they have launched supply chain vendor financing business in Q4, whereas if we talk about home loans, LAP, loan against mutual fund, all are in pipeline to be launched shortly. Also, if we see the chart, the stock has been advancing for 6th consecutive month, and on year to date, it is up by around 60%.
Okay, keeping an eye out on Jio Financial Services on the back of their numbers. But let's move on, talk about Zomato. Ankita, this one is in focus again. Shares are seeing a sharp jump up today. What's the reason?
Well, absolutely, Zomato is in focus again. In fact, it jumped 5% in early trade today, and of course, it has given up those gains, but it's still trading with gains of 3% right now, after the online food delivery platform reportedly upped its platform fee by 25% to 5 rupees per order. Now, it has increased the platform fee for Delhi and NCR, Bangalore, Mumbai, Hyderabad and Lucknow. Zomato also introduced a platform fee. Remember, it was a flat charge that the food delivery companies charge for customers across the orders, and it was rupees 2 in August last year, which was later hiked to rupees 3 to improve the margins and with an aim to become more profitable. Also, a couple of brokerages that have come out with a note. Motilal Oswal Securities has maintained a buy rating on the stock with a target of 220 rupees. Kotak Institutional Equities find the stock worth at 210 rupees, maintaining a buy, and UBS is also maintaining a buy on the counter with a price target of 250 rupees per share. So that's the news coming in on Zomato. Clearly a positive one there. Stock trading with gains of 3%.
All right, Zomato, there you go, trading higher by about 3%. Aditya, coming to you, let's talk about DV's Lab, and this is that time of the month or that time of a period where DV's Lab, everyone's waiting for a good performance, but the stock disappoints right after its earnings. Hopefully, are the charts indicating this time around, maybe it will technically looking stronger and won't react that steeply?
I would like to believe that, Cheryl, good afternoon. Stock has taken support at its 200 DMA and also the 89 period DMA, and from there it's bounced back. So I think there is good strength in the stock after a throwback. Stock is now looking up and over the key support areas. On the upside, I think stock can easily test levels of 4,050 to about 4,100. And if the results don't disappoint, these targets can be met pretty soon. On the downside, immediate supports at 3,700. So it's a very good risk to reward trade to take, given just 70-80 point downside with a stop loss just below 3,650. I think one should definitely look at DV's Lab at current levels, add it to your portfolio for a target of 4,100 on the upside. And the technical indicators are suggesting that the stock still is in a bull trend. So nothing to worry much about there. If the results don't disappoint, it's a good buy at current levels.
Okay, good buy at current levels if the results do not disappoint. So let's
That's
keep
a
an
big
eye.
caveat that Aditya has given, yes.
But let's keep an eye out on that. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break. Welcome back. You're watching Market Fatafat on ET Now. Let's keep it going with the stocks that have been moving in trade today. We do have Voltas that's seen a sharp run up today. Mainly today, it's actually managed to hit an intraday record high level. And let's not forget why. Obviously, summer season is here. That's one reason. But UBS has upgraded the stock to a buy from a previous neutral rating. They've hiked the target price to 1,800 from previous target price of 885 rupees. They believe that Voltas will surprise in terms of the market share. They believe the room air conditioners and Voltas Beck JV is something that is seeing an improving trend in terms of the JV profitability over there. So operational margins and everything also will start seeing an improvement. And they believe that Volt Becco will actually turn break even by FY26. They see FY26 market share at around somewhere 23% versus 19.5%. So yes, that's what is something that the street is factoring in, and that is why today the stock is buzzing in trade. Managed to hit an intraday record high. Right now also it's at those record high levels. Second consecutive day for the stock.
All right, let's move on and let's talk about JSW Energy then, and the stock is actually seeing a good uptick last time I checked. So right now, that's why the stock was in focus and it's given up all of its morning gains. But the reason why the stock was actually gaining is because they said their wholly owned subsidiary, the JSW Neo Energy, got a letter of award for about 700 megawatts of solar capacity from NTPC, and the award was received against a tariff-based competitive bid that was invited by NTPC for setting up about 1500 megawatt of interstate transmission system connected solar power projects. This is what the company actually said in their filing. They're saying that with this order, the company's total locked-in generation capacity has increased to about 13.3 gigawatts, out of which 3.1 gigawatt comprises solar power, and its current installed generation capacity is about 7.2 gigawatts, and the company is expecting to have about 9.8 gigawatts of installed capacity by 2024. But yes, it opened up with a good uptick, giving up all of its gain right now, and that's JSW Energy.
Okay, that's JSW Energy, but let's move on and talk about another consumer durable name, and Havells, Aditya, that's the one you picked out for us. Last 6 months surely has seen a decent return in terms of a 22% uptick in terms of a return. Still a buy call for Havells? What's the view here?
Oh, absolutely, Vinny. It's a buy call. And if anything, I believe the performance that we had seen previously could be repeated in Havells. It's just going through a consolidation phase at the moment. We call it a pennant pattern consolidation. The moment it breaks out of that consolidation pattern, the neckline is at 1650. So the moment it crosses above 1650, stock will head higher, much higher. In fact, targets could be 1700 first, and if 1700 is taken out, stock can head much higher from those levels. So do watch out for a trade above 1650. If that manages, then I'm looking at a target of at least 1700, about 1800 on the upside. Plus, look at the volume structure. All the bull candles that I see, there's heavy buying on those days. So shows that people are heavily buying into the stock. Everything is going good for the stock. So I believe it's a good buy even at current levels. Add more above 1650 and look for a target of at least 1800 on the upside, if not more.
All right, good buy is what Aditya has termed Havells. But let's talk about Wipro then, Ansh. And yes, surprise, surprise, Wipro is gaining in trade today. But how are the earnings?
Yes, the stock is up around 1.5% in trade today. So let's actually compare the numbers with the expectations. IT service segment revenue was up by around at $2,657 million versus expected of $2,650 million. But in CC terms, we saw a decline of around 0.3% versus 0.4% decline expected. Total booking was at $3.6 billion in Q4, whereas if we talk about margin, it came in at 16.4% versus expected of 16%. Also, large deal TCV at $1,200 million, which was up by around 9.5% on year-on-year basis in CC terms, whereas the company has actually given a guidance of minus 1.5% to plus 0.5% in constant currency versus expected of minus 1 to plus 1%. We also have few brokerage notes of Goldman Sachs and Citi. They have maintained actually a sell rating on the stock with target price of 430 rupees. On charts as well, if we see the stock is was trading actually in an oversold region. Now it seems to be coming back in the normal region.
Okay, that is Wipro for you all, but we did have HDFC Bank that reported their numbers over the weekend as well. How are they looking like, Ankita? What's the stock doing?
Well, yes, Vinny, HDFC Bank reported its number. Now, the numbers look largely, overall basis, the number looks positive. However, we did see a sell-off come in the morning. In fact, there was a sharp sell-off in the morning right after this, the markets opened. But let's look at the scorecard then. Overall positive, NIIs were in line. The PPOP was also in line. PAT was a slight bit of a miss coming in on the PAT front. And the miss was owing to the contingent provisions that were worth 10.9 thousand crore rupees. And that's the reason why the miss on the PAT front. But let's look at the NIIs. We did see an uptick of 2% on a sequential basis. PAT also saw an uptick of 1% on a quarter-on-quarter basis, but a slight bit of a miss that, like I mentioned in the beginning. Also, the asset quality remained stable. The credit cost for the quarter was a little better versus the consensus estimates, which was also a positive. The NIMs came in at 3.4%, which was an increase of 4 basis points versus the street expectations of 3.35%. Again, a positive. ROA stood at 2%. But look at the con-call highlights here. The long-term high-cost borrowing did not run down this quarter. It could start from the FY25 onwards. That's what the management said. The bank has also created counter-cyclical provisions of 10.9 billion rupees to enhance the resilience of the balance sheet, and there is no anticipated asset quality issues. Couple of brokerages, we had Nomura, maintaining a neutral and increasing the target price to 1,660 rupees, and Nuvama has maintained a buy and hiked the target price to 1,760 rupees on HDFC Bank.
Yes, absolutely. HDFC Bank, given the fact that it is a huge weightage on the indices, that's the reason why I think Ankita also surpassed her 1 minute time.
Yes, I think she's giving the weightage to that as well.
Yeah.
But yes, the big weightage that comes in for HDFC Bank as well. After the merger, specifically, HDFC Bank is a whole united unit.
Yes, exactly. So that is HDFC Bank for you, but it is out, down and out in trade, among the top losers on the Nifty. But Aditya, let's talk about MCX. And yes, how is the screen looking for MCX going ahead? All bright?
It is all right, and I'll cover it for Ankita by keeping it short. Stock is making higher highs, higher lows. Cheryl, I believe stock can test levels of 4,200 to about 4,400 on the upside. One should definitely go out there and buy the stock. Recently, it tested the neckline from which it had broken out. Now it's resumed its uptrend. I believe it's a good time to add the stock at current levels, and definitely look at the stock for a target of at least on the upside 4,400 with a good support on the downside at 3,800.
So yes, definitely Aditya making up for the lost time over there. But yes, MCX definitely looking bright on the screen is what Aditya has to say. But let's talk about Welspun Corp, and looks like things are looking bright for this one as well, because at one point in time it was trading high by about 4.6%. Thank God it's actually maintaining those levels. I don't have to reverse it saying that it's lost. But yes, it's holding on to the strong gains of about 4.5%. One of the reasons why the stock saw that spike come in is because the company has informed exchanges that it's got multiple line pipe orders worth about 872 crore rupees since their last disclosure, which they made on March 22nd, which means within a month or so, the company has got an order worth about 872 crore rupees, and the stock today has snapped a 4-day losing streak on back of that news.
So surely keeping an eye out on that one, Welspun Corp over there. Let's move on. And Aditya, CDSL, what is this one indicating in terms of charts and technicals? What is the level that one should be keeping an eye around now for CDSL? We've already seen a strong return. How much more upside?
I think there is much more upside to the stock. Vinay, if somebody wants to even buy at current levels, they can buy the stock at current levels. I'm looking at a target of at least 2,400 on the upside as far as CDSL is concerned, with a good support on the downside at 1,900. Stock continues to make new highs after a good consolidation phase. So now we've seen a bit of consolidation in the stock after it added a new high. So I believe it's time for the stock to resume its uptrend at current levels. Soon you can see higher highs in the stock, makes a good buy. Even the technical indicators, RSI and MACD, both are sitting comfortably in the bull territory. So that tells that every consolidation is a buying opportunity for the stock and will continue to make higher highs, higher lows. So at current levels, with the stock was closer to about 1,800, buy for a target of at least 2,400 on the upside CDSL.
Alright, 2,400 is the target that Aditya has set for CDSL on the upside. Definitely a lot of room left for an upside for that one. But Ansh, let's talk about Laurus Labs, and why is this one in focus?
Yes, the stock is up around 1% in trade right now. US FDA has actually completed inspection at company's API manufacturing facility, which is situated in Andhra Pradesh. The inspection was conducted from 15th April to 19th April, and after that the inspection was successfully closed without any 483 observations, which is a positive sign for the company. Also, if you see the chart, the stock seems to be trading above key DMA levels, which is again a positive sign. So for those reasons, the stock is in focus today.
Okay, keeping an eye out on Laurus Labs. Let's move on and shift the focus now to Ultratech Cement. Ankita, why is this one in focus?
Well, yes, shares of, we can see an uptick of 2% coming in on Ultratech Cement. This after the company announced that it is going to purchase a grinding unit having installed capacity of 1.1 MTPA in addition to a captive railway siding at Parli, Maharashtra from the India Cements Limited for a consideration of 315 crore rupees. Also, the company's board of directors have approved the brownfield capacity expansion with the 1.2 MTPA at Parli, Maharashtra at a cost of 166 crore rupees post acquisition of the grinding unit, and 1.8 MTPA at the Dhule, Maharashtra, which is at a cost of 338 crore rupees. Now, the company, the said capacity expansion is likely to be added by FY26 with an investment of 504 crore rupees through internal accruals. That's the word coming in from the management, and on the back of this, we see an uptake of 2% coming on Ultratech Cement.
While the picture doesn't look that bright for India Cements, from whom they've actually bought this particular grinding unit, the stock is down about 1.3%, Vinny.
Absolutely. So surely keeping an eye on both the stocks today, Ultratech as well as India Cements. Let's move on and talk about a chemical name then, and SRF. Aditya, what's the chart indicating now for SRF? Where do we see it headed? Currently at 2,565. What is the upside or a target that you're keeping there?
Vinny, the first target that I'll play with is 2,800, and stock has finally managed to break out from a very long consolidation triangle. Rather, if I talk about it from September 22, stock hadn't done anything for itself, most of the chemical stocks. Now looks like stock has broken out from that trend line resistance and it's headed higher. So 2,800 will be the first target. On the downside, immediate support is at 2,450, so makes a good risk to reward low hanging fruit, and consolidation is over for the stock. Plus, RSI has just inched and entered into the bull territory, so that tells me that there is decent upside in the stock still left. So one can definitely go ahead and buy the stock at current levels for at least 2,800, and if 2,800 is taken out, then we'll take out fresh targets of the stock.
All right, so that is the take coming in on SRF. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss. Don't go anywhere.